All right, it's time in which we will now have our Trader Talk segment, and today we will bring in my man Brett Manning. Brett, how are you?
Doing good, Jim. How you doing?
Well, I imagine this market's tough, and you just went out with a new short, didn't you, in the mini Nasdaq? I think I stepped away for a second, didn't see. So you're in this one at 76.56, and people can get into it right now at your price. Right now. So. You've been selling it all day. You've been shorting this thing all day. It's like and the plunge protection team has been buying against you. So what say you now?
I say I feel pretty confident in this one. I mean, we'll see what happens. I could be very wrong. My sense is that we're going through the process where the market is going to gradually digest that the kind of the PR campaign going on from the White House right now about what's possible is something that is really pretty absurd when you look at how far apart the two sides apparently still are based on some of what's come out over the last 12 or 18 hours. It looks to me like we're nowhere near anything even kind of like a deal. And the fact that China's still going to participate in the process, of course they are. They're going to manage the process. This is not about a final deal. As far as I can see, I guess there is a small window possibility that you'd have to admit into your universe of thinking that suggests that China prepared two drafts and they sent one just to see if it would work, but they've got another one that they're already comfortable with that would be much more in line with the White House expectations. But it just doesn't seem likely to me. I've been in some pretty complex negotiations in the past, particularly back in the sort of Silicon Valley part of my life, and when you get something where somebody is maneuvering that much in terms of what they're going to redline, it's a sign that you've got a long ways to go. And I think that the market had basically priced in the idea that this is behind us and that we were past this whole China trade war situation. It was just a matter of kind of getting the I's dotted and the T's crossed. So I don't think that the pricing that the market has in it around trade, which is an important element, it has taken into consideration at all the reality of what's starting to emerge about the situation. And I think that it's also really important to remember. So we got a feedback a few minutes ago, and it's good. So the last headline we got from Sanders out of the White House, that China wants a deal. That's been used a number of times, and the feedback says, is this headline worth anything aside from price action? I mean, of course China will state or indicate that they want a deal. So what? Ask a pending free agent, would you like to sign an extension with the Red Sox? Sure. They would like the deal. I'd love to stay here for the right deal. That idea, but I would point out that it's even worse than that. Like, that's dead on as far as the substance of what was said. But it's even worse than that because you also have to understand that the White House knows that the strength of its negotiating position is intimately tied to the strength of the stock market. That's a part of this process, 100%. Which side, China or the U.S., can portray that it can weather playing hardball, that it can stand to play hardball, is going to have more leverage in the negotiation. And the White House knows, here we are, coming into what is now the next round in a situation that's got a series of further rounds to go, which should be apparent now in the White House. And they want to start that process because they can't just walk away from the whole situation. They want to start that process, making it perfectly clear to China that they can raise tariffs substantially and that it won't hurt the popularity of this president coming into a campaign. It won't hurt asset prices. It won't cause a downturn in the economy, that we're invincible to all that stuff. We can go ahead and play super hardball with you, and it's no big deal. They want China to feel that way. And what's going to hurt that is if the stock market's tanked 10% since people started to realize that this was kind of on shaky ground. So I think that it's not exactly a disinterested opinion coming out from the White House right now. So I think it's important to remember that. And I think that the market will take that into account as well.
All right. I think Gavin is going to jump on and ask you a question. Are you there, Gav?
Yeah, what's up, Brett? Just
Hey.
a quick question. It definitely seems like China's kind of read Trump's Art of the Deal book and is going for that on their own end, right? Throwing things out there, just seeing what could stick. But were you surprised to see some of the changes in the Fed funds futures and moving a little bit more towards a potential rate cut now? So I saw
Not at all.
Yeah. So you think Trump's just going to kind of continue to hammer on the idea that the Fed's causing the issues rather than his negotiating with China is, and then also pointing out that the Democrats are probably weaker on trade, and this is going to turn into a little bit of a battle on both sides on who could be tougher on China right now?
Yeah, it's possible, but none of that is. I mean, there's a lot of things the market has going for it. So there's reasons why the market might be able to shake this off, but I don't think right away. I think that we've got a drop through yesterday's lows on tap this afternoon. I think that we've got some resetting to go to kind of reorient to a new perspective about where we are in the process with this trade deal. But then there's lots of other things going for it. I mean, there's a lot of strength. There's better than expected earnings situation. There's a Fed that is, as we talked about on Monday in our Sentiment and Flow show, a Fed that the degree to which there's a possible rate cut coming is inversely tied to how this trade deal goes, unquestionably. If things really blow up, the Fed's probably cutting in September. And so we've got that kind of two-way process going on here. So I'm not surprised to see that, yeah, I mean, right now, December is showing big-time one cut. And September's September's still a ways out. But, I think that, yeah, if things really blow up, then I think the Fed funds are going to show that. But, none of this is what the market was anticipating, I think, given the messaging that we had begun to see.
All right, Brett. So it's easy to say right now, just based on the price action, that right in that 280, we'll call it, 2875 to 280 zone, there was a whole lot of buy-ins. They were really trying to support that, and if you just watch the price action there was a big tug of war. And do you think it's been enough to shake out anybody who might have been shorting around the same place as you were? Because I'm imagining that you weren't the only one out there. I mean, sans the listeners as well and subscribers and whatnot. But there had to be some other traders out there who might have been doing that. So I would think that there could be a cascade based on the fact that if we can get through that, 2875 level, that might be the trigger. Do you agree?
Yeah. I mean, the bigger they come, the harder they fall.
Sure.
And we definitely got that extra headline to really spike up through. I mean, I think that I watched the orders come through at certain points. We had a moment where this is my third time shorting today, I think.
Fourth, I think. Fourth. Maybe.
You know what's fantastic? What really puts me in a good position right now is I made money on all three of the other ones, even though I was wrong on all of it. So I'm in a really good position right now because if they manage to do this again and take it all the way back up through my stop now, I'll be about flat on the day, and I'll have had 4 good shots at something that I think can work. And that's just from a probabilistic standpoint. That's a great position to be in. So I guess I feel pretty good about things. But that third short, when we went along and looking at the NQs, when we went along just underneath my stop for half an hour, really got within 5 points of my stop about 3 or 4 times. Some of the orders that I saw come through there, in particular the last time that we were hanging out up there before we dipped down and I was able to take a scalp, I saw somebody sit on the offer with like 1,000 contracts and then nail them all through the market through the bid. Mm-hmm. Like that's a process. That's somebody who is sitting there saying, who's working with a really deep pocket situation, and it's a single player, it's a single decision maker who thinks that the market is just ridiculous for sitting up there and it needs to be sort of taught a lesson. It just slams into the bid to see what's going to fall out, like shaking an apple tree to see how many apples fall off. And that's what took us down. That's why I scalped when I did, because I don't want to feel like the market's in a situation where somebody has to do that. That's not the way that I want to see a short work, is somebody trying really hard to make it work. That's a vulnerability, and that's exactly what that second headline cleaned out. So I wanted to see a situation where, it's nice to get that all cleaned out. And now, after cleaning it all out, the type of action that I'm seeing now is much more, I think, like it could be working toward a kind of give up of people who were buying earlier today, because I think there's a lot of folks who think, hey, this market was in a great place, and the only thing that brought it down was one Trump tweet, so we can bring it right back up on another one. And I think that mentality is built in here, but I think that that's just not really appreciating the bigger picture of how far apart the two sides seem right now. And I think that that's got to be something that gradually is digested here through the course of the afternoon price action. But we'll see. Again, I'm in a good enough position where I'm able to take 4 shots at something that I think could be a pretty big trade, and if this one does not work out, I will have basically lost nothing today. So that's a good position to be in, and it allows me to go ahead and take this next shot.
Yeah, well, good stuff, and that is essentially what I refer to as a free look, and that's the
Pretty
best
much.
position to be in as a trader when you can get as many free looks as possible, and then you're set up for the
That's
big
right.
one. So, all right. As far as your target, I think I remember you saying you were targeting when you shorted the Sunday night.
Yeah, that one
I
was
think
not a free look.
yeah, no, for sure. But you chimed in yesterday and thought that maybe 7,500 even was that? Is that still your?
Yeah, I mean ballpark. I look at some of the action that we had in late March and early April, where we got into this trend channel to the upside that was extremely shallow, extremely grindy, and every single day was just an insanely narrow range. And it's been my experience when you move through a process like that, it had a little bit of a wedge to it, and we blew out the top of that wedge, and then we formed a resistance zone, and now we've gone through the bottom line of that wedge if you extend it out. It's been my experience that those sorts of situations, you generally take out all of that. So everything the market was able to build through that process will probably all go in this move. And so that kind of, you overshoot that process, you're down around 7,500. You've got a 50-day average down there just under 7,500 in the NQs. And I'm really focused on the NQs right now because I think that's where a lot of the leadership has been and a lot of the weaker hands may be. For what excitement we have seen come into the market, I think it's probably in tech. So, I think that's kind of dictating things a little bit here. So I want to see that process kind of mature. I think that there's a likelihood of taking out all of that narrow, super low volatility, grinding kind of process that we had, dump through the bottom of that, and maybe bust out the 7,500 level, maybe bust out the any stops that are sitting around the 50-day. That would be nice. That would be a kind of a full blossoming of this process as I see it. Now, again, this is super headline-driven tape. You always are going to have lower conviction in a super headline-driven tape because it always really is down to exogenous points, exogenous inputs. And so, from a technical perspective, if I see something that feels to me like it should happen based upon my read just looking at the price action, that doesn't really matter if it's exogenous influences that are really driving things here. So, I'm going to continue with my process. I've got a bias, and I'm looking for structured setups that allow me to take a position that I feel has a good risk-reward relationship, allows me to kind of have a falsifiable stop level. I certainly think at this point, after we blew out that on that second headline, after we blew out that initial top, went all the way up, exhausted all those shorts, came back down, and we've kind of hit the slope line and we're bouncing around it. I certainly think we shouldn't get anywhere near back to the highs of that last spike this morning, if it is the market that I think it is. So I feel like unless there's a headline driver again, another tweet or something, I feel like, if the market moves back up to that level on its own, then I'm just wrong, and I'm okay with that.
Well, guess what? I'm looking at this daily chart, and we have a gap. I show a gap in the daily chart for the Nasdaq futures that would close at 74.14.5.
Oh yes, yeah, right.
Yeah, so
that would be a significant break under the 50-day too.
Yeah, so let's root for that. That's Jim's target. All right. So we had another big old miss in the crude inventory data today. Man, what are those analysts doing?
Maybe they're suffering from some kind of time effect where they're off by a week, because it seems like if you just shift forward 1 week what their estimates are, they'd be doing really well.
Okay, yeah.
Have you ever noticed that? Like, I think that the last week's estimates were for this week, and this, 2 weeks ago were for last week. It seems like, generally speaking, I guess they're fighting the last battle. But yeah, it's been really just kind of flip-flopping as far as I mean, last week was that was a huge build, right? Wasn't that the 10 million build?
Was that last week? Yeah,
I think it was. So I mean, there may be just kind of flow-through issues where really, if you average these two out, it's still we're building, but it's not quite as dramatic.
So yesterday, I had a line in place that you and I were talking about at 60.75, and
Yep.
was able to walk some of our listeners through a trade on the long side, which is actually counter trend at the time. But you didn't get in on that one. Any particular reason, or just don't have any opinion in crude right now?
Yeah, I mean, it was right in front of. I don't like trading crude on Tuesdays.
Hmm.
I like trading crude on Wednesday afternoons and then further because I don't like feeling like I'm coming right into both API and EIA if I want to swing it.
Sure.
So, I mean, and same thing happened 2 weeks ago. We had a really nice short in oil, and it was the exact same thing, right? I mean, I shorted in front of API, ended up, I'm probably able to scratch it after a scalp. So I don't think that turned out to be bad, but, it was the short that I took after EIA that turned into the 300 tick winner. So it just kind of, it opens things up because you've got another 6 days before you start getting hard data again. And it's just, I just don't like to, so yeah, I mean, it triggered that setup, but again, I just didn't feel like stepping in front of all the data.
Yeah, and that makes sense. My time horizon was specifically for a day trade, and I know you tend to carry or prefer to carry things a little bit and squeeze it. So, but that makes perfect sense. Let's turn over to the euro, and another area that you and I had highlighted was the 112.50 area. Looks like we came back and tested it over the last 3 or 4 sessions or so. Let's see. Do you think this is a potential breakdown in the euro?
I mean, it's with everything that we're talking about, as we said, it really plays into how we're going to price things, expectations in terms of the Fed funds futures. And I think that the idea is, so point number one on the euro is, and we've talked about this every time we've talked about it lately, the thing that is built into that market is everybody understands that Europe is in a downside leadership position cyclically right now. And so there is a very big short position that's sitting there, and it's constantly going to be vulnerable to, let's say, things start to break down more for the U.S. That not only weakens the U.S. cyclical position in theory, but it also puts a Fed cut back on the table, and it probably squeezes the heck out of the euro. So it ends up being, right now, intimately tied in to all the tweets going on and the same drama. In fact, possibly more so than the stock market, because the stock market still has a more clear, maybe a fundamentally positive situation when you just kind of, as long as the trade situation doesn't deteriorate too much more, it just continues being what it's been, then I think the market will shake itself out, find its footing, and move back up. But the euro probably is going to be more sensitive to where the a Fed is in terms of its cycle. And I think that is something that will be reactive in a very direct way. So I think that with that short position loaded in there, it's really tough to take that bet. But if you just pan back and just take a look at this kind of escalator pattern on the daily chart that just keeps developing, it looks like at some point, I mean, my gut feeling just looking at like a monthly chart of the euro is that there's this waterfall decline coming, and it's just a matter of time. And maybe it's after it really gets shaken out hard again. So that might be one way to look at it. Perhaps we do get that cut back on the table. Perhaps the euro short ends up really being something that's like an August-September kind of entry with a waterfall decline through the year end. But I would like to see some kind of event shakeout again.
Event shakeout. So shake out the current short so that you can short it?
Yeah.
Okay.
Exactly right.
Got it.
Hand me their position at a better price.
Okay. Fair enough. What other markets are catching your attention lately?
I mean, gold just kind of sitting around where it's been. So it's just weathering this process. So it's slightly in the money on that position. It's not really tremendously interesting. I think eventually it'll be interesting. I knew it could be something that just kind of takes some time to work itself out. I mean, I think that now that we've got some volatility back in equities, when I start to see a VIX up in the 20 area, it's going to be pretty much what I'm looking at. So I've really been kind of focused on just getting a feel for the tape. And, that was a tape-based read the other night. I think was it Monday night I took that short? I think it was Monday night. I can't remember. The days are really blurring together for me right now.
Yeah, maybe it was.
But
yeah,
that I think it was. And that was just based on, when you start to get a little bit more, at least implicit volatility, something going on under the surface, I kind of start to see that, the way the orders are coming through. It just feels like there's something there's a strategic deployment of supply, and, trying not to put orders through at certain times, putting orders through at other times, that gives me a sense of like, well, there's somebody here that really wants to sell, but doesn't want to sell in a deep red tape. And that kind of feeling is, kind of builds a prepotency for me. And I start to pretty much just spend a lot of time really trying to look for more signals and signposts in terms of where things are. And I guess that's been pretty much consuming my market analysis for the last few days.
Yeah, well, it's definitely encouraging for a lot of our listeners with this VIX up at least close to 20, sniffing 20 anyway, 19 and change. So we'll definitely be on the lookout for some trades. It's just been a tough tape today for sure.
Boy, it has, yeah. Well, and I would say like there's a difficulty here, and it happened the other night through the Monday night situation. Is the same kind of process, and the process is there's such a headline minefield effect right now. You can see these things go off like little explosions that people step on in the tape. But I think they're all one direction now because both sides are going to want to support their asset prices, and it really is going to be a game of that. And at the same time, we came into this process, and as Gavin and I talked about on Monday, there wasn't a tremendous amount of excessive optimism in the market. I mean, there's still plenty of pessimism built into things. And so as soon as you start to get this, the trade war is going to go on forever now, everything's falling apart kind of feeling, every time you start to get some clear negative feel to the tape, it's just going to fill up with short interest. So that combination just makes it really tough. You get a lot of people who start to lean on things, and then you get that headline. And we've seen it a number of times. It's really, really tricky to navigate that kind of process. So it's one of the reasons why I just hate, politically headline-driven markets, and I usually just kind of stay away. But today just feels like this market's going to sniff out that, that the way that these types of headlines are going to lose their ability to support things in the wake of what appears to be a reorientation to a realization that there's just no chance, unless I'm wildly wrong about what China just did with this latest maneuver, there's just no chance we're going to have this resolved by Monday. So, you really got to buckle up for a much longer process, I think. And I think the market has to kind of come to terms with that.
Well, it seems like we would need something productive by tomorrow, right? Because if the tariffs kick in at 12:01 Friday morning, we would need something, or otherwise that's a negative sentiment, I would suspect.
Well, I mean, how are you going to get that too? Like,
I don't know. I'm just saying.
Like the degree of, like, it looks to me like what China is doing is saying, we're going to totally do everything you guys want. It's going to be really awesome. Just, just trust us.
Yeah.
It looks like it. That's what it looks like. And the U.S. is saying we need a legal structure in place that means that in advance that there is a severe, direct, and inescapable penalty for not 100% complying with something that we have in writing that both sides have signed. And China is saying, that sounds great, but we got this other idea, which is we'll just say we're going to do stuff, and then you got to just trust us. And it looks like that's where this is. And if that's where this is, then that means that all the progress that they thought that they were making was just empty. I don't see how that's not the case. That it's just that Chinese leadership is protecting a vision of its future, and it's not going to give up on it for anything. It doesn't matter what the tariffs are, and it's just instead looking at this as a process of kind of trying to get something into place that will satisfy the U.S.'s need for a quote-unquote trade deal in a superficial way, but that won't really change anything about how China plans to proceed over the next 5 to 10 years. It looks like that's where they are. And if that's where they are, then there's no way that we're anywhere near anything, even kind of like a deal. So that's what I'm seeing at this point. And I think that the market's got to kind of, go through a process of saying, well, that may be where we are, is that this is not even, within a zip code of a deal. And what does that really mean about what's been priced in?
But you know what? We say this every single time it's an item. We bring up the same exact conversation, and it's never close. It's never close. It's like crying wolf, but everyone keeps running to the little boy crying wolf. It's just crazy.
But you've got to think that is a process of deteriorating returns. and eventually there needs to be
I think
the
they just
emperor wearing no clothes.
I guess they just wait long enough until it's like, oh, we forgot about this, and then all of a sudden,
right. I think that's been China's strategy. Like of just kind of trying to just kind of string this along and make it look as though they're participating in a process when they really have an idea of what they're willing and not willing to do, and what they sent back suggests that the types of things that and the other thing that's happened, I think, is that it's become a more informed dialogue than it used to be. The public is now more and more aware of the sorts of things that will be incontestably seen as a bad deal for the U.S. And so there's more pressure on the White House to make sure that it can show evidence of what previously were, I think, poorly understood concepts. And I think the public has become far more informed about the real under-the-surface issues that need to be solved in terms of, IP transfer and in terms of competitiveness and subsidization. And I think that there's enough public awareness now that you can't get away with what maybe Trump could have done 6 months ago, where he could have just gotten a big trade deficit deal, where they promised to buy like $1 trillion worth of soybeans or something, and we call that a done deal, and he could celebrate it. Now, it's trickier because I think that there's a greater awareness of some of the things that China really isn't going to be on board to put an enforceable contract into place on. So I guess that makes it a little bit more difficult too, because there's not this face-saving kind of superficial version of this deal that I think that the White House believes it could get away with in a pinch.
Well, and if there's one thing that you can characterize China as, maybe this is somewhat of a stereotype, but throughout their history, they have been known to be incredibly patient. And in the case of having an emperor in charge for
lifetime... Well, it goes back to the leader for life issue, right?
Exactly.
He doesn't have an election coming up in a few months.
So I just don't understand how the market just is always caught off guard by the different headlines. Old headlines came out today. Oh, China may retaliate, and all of a sudden the market just squeezes higher. I'm still scratching my head over some of the things, but well, you know what? If it didn't happen, then we wouldn't have as much to talk about now, would we?
There you go.
So they keep me on the air. So hey, I guess I'll take it.
So I'm gonna indulge myself just to wrap up, because it seems like the thing that everybody is really focused on is Lyft and Uber, and I am not a single stock analyst, and so take everything I say with a giant grain of salt.
But you are a pseudo venture capitalist.
There's a little bit of that, but here's so my sense of these companies, honestly, I do not understand how they're ever going to make a single penny of profit ever. And the reason why I say that is because the big payoff moment for these things, as far as I understand the situation from people that I've talked to, the big payoff for these things is it's a waiting game and it's a market share game until there's a tremendous amount of movement in terms of autonomous vehicles. And, the other thing that I've had some conversations with some people that have given me a sense in a couple of different municipal areas where the future vision of autonomous vehicles is going to be probably something that is public transportation, and that there are zones of big downtown areas in big metropolitan regions that are essentially dedicated to autonomous vehicle transportation that is run by a municipally run rideshare program. And if that's what happens, it's going to be like the subway system or the bus system, only it's going to be a bunch of cars. And, that's going to basically be the end. I don't see how these companies have a business if they're not a part of that picture in a private sector manner. And if this is all a big bet on an eventual move toward autonomous vehicles, and autonomous vehicles end up being a public sector issue, then there's just no gold at the end of the rainbow. So there's my wild indulgence on speculation with Lyft and Uber.
So you shorten both of them?
No, because what I just said is probably something that's a great short in 2025 or 2030. I mean, I don't know I don't know when there would be a moment where people feel a sense that they would be willing to financially understand what I just said, or if what I just said is true. But, I don't know how long it's going to be before there are signals like that. It just seems to make more sense if that's the way the world eventually works. You got an app, your downtown New York rideshare app, and you pop onto it, and there's a big, giant tower spiral parking garage with a bunch of electric vehicles charging in it. They keep on pouring out into the streets as there's demand on the app, and it's all just run by the city. It just seems like it's unlikely to see that because there's so much more coordination that would have to go on. It's tied into infrastructure for a high density area, and I don't see how you leave that in the hands of a private company. And I don't really see how these companies make money unless they're eventually able to capitalize on, high congestion areas with lots of autonomous vehicles. So it just seems like, there's a big bet, a speculation on eventually this huge payoff, and it seems like there's a reasonable chance that payoff is never going to come.
How are autonomous vehicles going to pump gas?
I think probably going to have some kind of cool charging station that they drive up to.
Yeah. Maybe the service station will be back in business, and all the Lyft drivers will have to do that.
There you go.
All right.
Hey, there you go. Sure.
I'm thinking 20 years in the future, right? Got to bring it back. All right, Chart. Well, I'm going to keep you on the line because it sounds like you're going to stay busy here in these equities, and if you have any updates, feel free to jump on and we can talk about it.
Sure.
All right.
And just for the record, I think that even now is probably still a good short.
All right. Well, and we're sitting not too far away from where you got in. You got in, what, 56? It's trading 53? Yeah.
Right.
So there you have it. You can listen to us, and even if you're late to the party, you can still jump in. So, all right, Chart. Well, thank you so much for joining us today, and I look to talk to you shortly.
You got it.
All right.
Take care, Jim.
You too.